markets, speculation, and risk. This is the Chat with Traders podcast, hosted by Aaron Fifield.
What's good, everybody? Welcome to episode 180 of the Chat with Traders podcast. On this episode, I chat with the great Larry Hite. And I can't think of any other way to say it other than Larry really is the true definition of a market veteran. He's someone who first developed an interest for trading during the 60s. And as about 80% of traders who listen to this podcast are under the age of 50, that means Larry's been in the market for longer than most of us have even been alive, just to put some perspective on it. Besides a reputation for extreme risk management, Larry is perhaps best known as co-founding Mint Investments, a hedge fund formed in 1981. He's also considered to be one of the forefathers of trading systems and a pioneer of trend following. By 1988, Mint achieved an average annual compounded return of over 30%, its best year being 60%, that was in 1987, the year of the stock market crash, and its worst year being up 13%. By 1990, Mint was the world's largest hedge fund at the time, with $1 billion of assets under management. It was also around this time that Mint's performance caught the attention of Jack Schwager, as Larry was profiled and interviewed in the first book of the best-selling Market Wizards series. Now, almost 30 years on, Larry has written a book of his own, reflecting on life experiences, trading lessons, and pretty much how the most unlikely kid in the classroom went on to generate a significant personal fortune. His book is titled The Rule, and if you go to the link chatwithtraders.com/The Rule, that'll take you directly to it on Amazon. So, what did Larry and I discuss for this episode? Well, trading, of course, risk philosophy and probability, life and memorable moments, and Larry's work as a philanthropist too. On with the show now. Ladies and gents, here is Larry Hite. Given a quick read through your book, I was very mindful not to read it too much because I thought, you're probably going to have a few interviews in these coming weeks or months, and I thought it might be interesting to try and ask some questions which you might not get asked perhaps in other interviews, or at least not as frequently.
Super.
And one of the things which I think is very interesting about you, Larry, and where you're currently at in life and the career that you've had, I thought, when I do an interview, I like to try and think, what's the overall purpose of speaking to this person? And when I thought about it and thought about this conversation that we might have, I kind of thought that it'd be good to get your thoughts on life and also trading and markets, from someone who's had immense financial success in this field. And in line with asking questions which you might not often get asked, I thought I'd ask you this question. Is it true that you first learned about commodity trading, or maybe even trading in general, through a Playboy magazine?
Yeah. I saw an article. Well, let me give you a little bit of a background. All right. Look, when you're a kid, when you're a boy, the two things that you can do well, that you can be outstanding. You can be an outstanding athlete, or you can be an outstanding student, or a combination of both, right? Well, I did shit at both. And for the same reason, I'm blind in one eye, virtually totally blind, and I'm dyslexic. So that really fucked sports for me. And it didn't help me very much, because being dyslexic, when I was dyslexic, it wasn't even in the dictionary. I read about dyslexia. So I was dating this girl who was a teacher, and she was, and she had a book on learning disabilities. And I'm a curious person, so I picked up the book. I started to read about dyslexia. Couldn't spell it if you put a gun to my head, And all of a sudden, the more I read it, the more I see that they're describing me. And I think so I had two big failures in my early life. I wasn't good at sports, and I wasn't particularly good at school. Now, where I grew up, that probably the next career choice might have been crime. In the neighborhood I grew up in, that would have been a third, because crime is a lot easier to get into than great athletics or sports. There's no test. So I had this feeling of this really bad feeling about myself. But I always was a risk taker because I figured the only way I'm going to get ahead in life is to take a risk. And I read this article in Playboy about if you really want to make money, you become a commodity trader. Holy shit. Yeah, that's because my family is sort of second generation Americans. It was very important to do well financially. And I thought, well, I'll take a look at this. And then the more I got into it, the more interesting it became to me. And a lot of ways that people thought were crazy. Like I had a teacher, and the teacher said, I don't know, what did he say? He said, we went through all financial instruments. And he said, well, like commodities. These guys are really crazy. They trade on about 5% margin, and they borrow that money. The whole class laughed, except one person, me. I thought it was pretty amazing. She could do that. And that I didn't think it was so crazy because I understood the math better than he did. Because the math, the way the math goes, if something is trading, let's say has a 10% volatility, right? You can see you can't leverage too much because it can go down 10%. But if you look at futures, when I started, the volatility on 20 positions much different than the volatilities of one. Most people, when you hear stories about market traders, they always told you about like the Jesse Livermore stories. They tell you about the one trade or the two trades. Well, in reality, you change the whole probability set if you're trading 20 things. And if you're trading 20 things that can be long, short, or both, that changes the whole game. And the risk changes. The risk goes down geometrically. So what the teacher didn't know was that the spread of bets changes the game, changes the profitability. In my current trading model, I trade a lot of options, and I go long and short, sometimes the same kinds of things. And I'm right about 70% of the time. Most traders in futures, if they're lucky, they're right 35% of the time, and probably 20% more like the average. So I could see the mathematical advantage of diversification, dynamic diversification. And that allows you to use a lot of leverage, but not in the way people think about leverage. It's not all in corn. It's not all in silver or gold. You spread your bets, you spread your probabilities, and you have a much different risk-reward parameters.
So this was what you're talking about here is something you heard in a classroom. It wasn't until many years later which you actually began to trade for yourself, though. Am I correct there?
Yeah. Well, I wanted to, but I couldn't find the place. And it took a while. I had to take a job with a stockbroker, but I wanted to trade commodities.
Can I just ask you something, Larry?
Anything you want.
So you kind of hinted at it when you were speaking just before. Your family is second-generation Americans, and you kind of felt a little bit of pressure to be financially successful. Would you say that you were perhaps, you personally were motivated by money? Like you yourself did have a strong desire to become wealthy?
Oh, absolutely. For sure. Oh, yeah. No question about that.
Okay. And then when you came into trading, did your learning difficulties, if that's, the best way to phrase it, did they present any unique challenges for you when you started, researching?
No. Strangely enough, they actually gave me an advantage. Go look at reports of losers. People lose fortunes. They have one consistent variable. They get into a losing position and they stay with it. It's a very Western world kind of a thing. They got the grit. No, man, I'm fucking used to being bad at sports. I'm bad at school. So it is no revelation to me that I'm wrong. And when I tried to get an article published, the guy said, well, yeah, what I really want is a guy, do you know anything about game theory? Of course I do. What do you want to know? I'm a partner. He's working with me. Yeah, know all about it. So I then, after I bullshitted him, I said, well, good. If you don't, well, I said, no problem. Right? And so I now take these books, I go to the science library, and there's not that many on game theory. And they're all fucking written in Greek. A lot of symbols, right? I don't know any of that. But I know about what I want to do, and I had watched a good trader who traded across the board. I said, all right, what do you need? Who are you trading against? In every game, you're against someone. Okay? Well, I did an analysis of who actually was the opponent. Well, there were the people on the floor, right? There were people in the trade, and there's a speculator. Now, what was the speculator's advantage? Well, what were the other guys? Well, the guy on the floor, he had the cheapest, quickest trade. And by that, this was the 70s, the margins and the commissions were high. So the floor had speed, and he was way cheaper than a retail client. Two, what were the disadvantages? Because the trade, the floor, I said, well, if you looked at it, if you're on a sugar desk, you can't go trade cotton. So I could do things, diversify my risk, that the traders didn't know their jobs didn't allow them to do that. You traded precious metal. So you within that. But you didn't have enormous scope. As they were, but as a speculator, I have the whole board. And then as long as there's liquidity, I can go do what I want. And that struck me as a great advantage.
Were you a trend follower from the outset, or did you experiment with some other styles and methods of trading prior?
I did. The first thing you look at is fundamentals, right? Because that sort of is what you see. But no, I my heart was a trend follower. I think it called to me as a very easy way because I was so bad. To be good at this game, you gotta, as David Ricardo said, you've gotta cut your losses. Now, if you want to really make money, not only do you gotta cut your losses, but you gotta add to your winners. If your clients or whoever cuts they do two things. They cut their losses and add to the winners. They'll get quite wealthy. But do you grasp what I'm saying?
Yes, I do. Yeah. I mean, it sounds very simple in theory, right?
Things that are simple in theory don't mean that they're simple in practice.
Right.
You have to be, you almost have to have some of the problems I had to be a really good trader. Because I'm used to being wrong.
Yeah, and that's something you emphasize quite a bit throughout your book, especially, through those first few chapters. I sort of really noticed that. When did you begin to gain traction as a trader? Like, did you feel like you had, you had some success with it fairly early on, or did it take you a while to get some traction?
It more or less came natural to me. Just like, because I couldn't see, ball sports did not work for me. I probably would have been a lot better if I would have been born in Australia. No. Basically, you play rugby or soccer. The ball's a lot bigger, and you have 2 feet to work with. So, because I was not a good student. I was not a good athlete. The idea that I could be wrong was not unique to my life.
Do you recall your first really big trade, sort of a key turning point early on in your career? Can you tell a story about that?
Sure. Well, I had a friend of mine, because I'm dyslexic, I've always had to have a guy with me who could see. He had this idea to trade corn. We made a lot of money in pork bellies, which I understood pretty well. But he was, he had this idea of corn. And so we figured, hey, we made all this money, we'll make more money. So we trade. Now, there were 2 contracts of corn, December and January, right? And so we put on a spread, long one, short the other. Well, there was going to be some drought in the Midwest. What I remember most about this drought, everybody knew it was coming, and, I said, okay, so we're going to go long and short one. Well, what we went long went down the limit. What we went short went up the limit. And there I was working in hedge, and my money just disappeared. I thought, holy shit. So I go out in the hall, and there are these Swiss guys coming down the stairs, and they must have thought I was crazy. Because I got on my knees and I said, God, please, please. I don't mind losing the money. Just, I don't want to have a debit. I don't want a debit, please. So, and that was a very big pivotal moment. My friend hadn't done the work as carefully as he should have. He was trading two crops of corn. And, but it was really, I was very young. I was young in the business. And I didn't know that you could lose money that fast. As it turned out,
So you went far too big on this trade, like you hadn't managed your risk very well.
No.
Okay. I like how you told that story, because when I asked the question, I was kind of presuming that you might tell the story about a big winning trade, but instead you focused on a losing trade, which I like. Do you have a memory of, a big winning trade which occurred early in your career?
Yeah.
Okay, let's hear that.
So I was trading cattle, and I had figured out that, the cattle, they really weren't going to be kind of calves they had that they needed for that particular contract. And so the market, but the market thought they would be too much because they didn't understand the months well. And that, 1 month it was different. It's a different contract. It's cattle, but it's whatever it is, right? So it went against me enormously. Not enormously in what I would think today, but given the amount of money my friend and I had, it was enormous. Finally, I didn't know how to get out of this contract because it was a lot of limit down in both places. And I went to the floor of the exchange, and I said, I got to get out of this contract. And there was a guy hanging around who wasn't on the floor, but he had a ticket to be on the floor. And I said, John, you got to get me out. And I picked him up. I threw him in the ring. Get me the fuck out. And he said, I'm a punch. I said, yeah, fine. He punched me later. Get me the fuck out now. And I got out. And I broke even. And then I went on to... Then I had a very interesting trade that went with me, cattle. And I come from probably like an average, lower income family. My father had a small business, but it wasn't a big deal. And all of a sudden, the cattle trade went with me. I mean, it really went with me. And I was up $250,000. Now, this is 1972. Right? So imagine what $250,000 worth then. And what do you think? You're 30 years old. You just made $250,000 would be right in your account. What would your emotion be?
You'd be pretty thrilled.
You would think that, right? The big emotion that ran through me was fear. Not fear of losing, but I had this girlfriend, and I knew that if she saw that I had $250,000, she wanted to get married. And I did not want to get married. I mean, so I said, and I luckily enough, things worked out. And I didn't marry. I wasn't going to marry her anyway. But we had great sex. That was my reason for being enthusiastic about it. She was very pretty. But the point was the fear of all of a sudden. For I know you're a very rich guy. You were born rich. But I don't know that it's true. But I had never had a quarter. I had never seen anybody that I knew with my family had $250,000 in cash. So I had fear of how all of a sudden anything that I wanted in my life I could have. And I thought that was very strange.
Was it almost like you kind of done very poorly at most other things you'd tried in your life, and then here you were in trading, and you just almost hit the jackpot in some ways on this massive cattle trade, and so you no longer had kind of an excuse or something to fall back on or something to blame for not being able to succeed at something because you just proved to yourself that you could.
Well, yeah, but I never think of it. I'm a very disciplined trader now, all right? And if I was smart, I would have been even more so then. I had a big fear that even when I was making the money, somebody would take it from me because I never wanted anything. Do you play team sports?
No.
Okay, well.
Sorry.
No. Well, when you're a kid and you're the last person anybody wants to have on the team, even though they like you, you have a different view of yourself. So I always had a feeling that, even when I did well, it was almost alone, but after a couple of years of making several $1 million a year, now I feel fucking entitled.
That big cattle trade that you had, where you made $250,000, looking back on that now, nowadays I know you're very big on risk management. That's one of the things which you have a strong reputation for. Back in those days, as this was one of your sort of your earlier trades, looking back on that, do you feel as though you risked far too much on that trade? Like, obviously it happened to work out, but if it hadn't worked out, you might have been back in that hallway on your knees praying that you weren't going into debit again.
Yeah, sure. The whole thing, the raw emotion. That's why I have a machine. Look, I have computers. I had all kinds of scientists work for me, right? Computer guys, statisticians, blah, blah, blah. I don't really ever feel that I made the trades. I feel the machine makes the machine. The odds came out. I've studied probabilities. I use a lot of Bayesian probabilities. And the markets make the money for me. I don't make the market. I really don't.
Well, let me ask you about that. Let's go into that a little further, because this is something which you speak about, again, a lot in your book, and I know it's very much influences how you think in terms of thinking in probabilities. So let me ask you, how do you determine the odds on a trade? Because that's something you speak about quite a bit. So, you know, when you go into a trade, you don't necessarily have complete information. How do you determine the odds?
I count. Every trade has a configuration, a mathematical configuration.
What do you mean by that?
Well, a new low or a new high, they happen all the time in various time frames. You can count them. That's the only advantage the markets have. Gives you all this data. So I know how many times in a given market they had new highs, new lows. So I can make a probability assessment. And then I decide how much of my money do I want to risk? Because I start with the idea that I can lose on that trade. I won't lose on a bunch of trades. If I do 100 trades, I'll make money, for sure. I hate to say that. Sounds very, very arrogant. But I run a casino. And as my wife once said to me, the casino always seems to win. And you know why casinos win?
Because they have an edge which they play over the long run.
Yeah, right. That's exactly right. I know my edge. And I know it in a Bayesian form. Thomas Bayes was the guy who said if you want to make a prediction, you look at it 100 times. You can have a pretty good idea. And see, I don't believe that. What do you think is the major fundamental in every market?
The major fundamental, can you elaborate a little more?
Well, do you think it's the supply, demand, what makes a price?
Well, I guess it depends how aggressive the buyers are as opposed to how aggressive the sellers are.
Okay, right. That's what makes the price. That's actually what makes the price. So the price is made by the last investor. Could be the stupidest person. Could be the smartest person. Or could be just an average person. But the point is, it's the price. And it's real. You know that if the exchange is fair, which most of the time it is, it's what people at that moment in time are willing to pay for that commodity or stock or whatever. And you can actually go back and look at the record of those prices. And you can see how the prices react when they're going down, when they're going up, when they're going sideways.
Okay, so just going back to the question of how you determine the odds of any trade. So let's say you're sitting at your computer today. I presume most of your trades nowadays are fairly automated. But
yeah, it's totally automated. And it's automated for one reason. The automation keeps me on track. It negates. I had to teach myself very early in my trading life that I have to have a clear. I never put an order without a stop. I know exactly when I'm going to get out, if I have to get out. I know exactly how deep the market is. Can the market handle this? And that's, so I'm always thinking, did you ever, you know who Kenny Rogers is, right?
yeah, the singer.
Yeah. Kenny Rogers wrote a song called The Gambler. And The Gambler, so Kenny in the song meets this gambler. And he says, to make a deal, the guy says, I'll tell you about gambling if you give me the whiskey in your bottle. Right? So the old guy drinks it down. He said, look, when you're sitting at the table, don't count your winnings. It's time enough for counting when the dealing's done. That's the line. Well, he's wrong, because if you're a good speculator, you know exactly what every dollar means to you, and you know what you measure that from where your stop is against how much your core capital is. So I'm always running that function through my head in anything I do.
Right. So determining the odds on any trade, because you're a very mechanical trader, very systematic, you're a systematic trend follower. You can take this strategy, you've obviously tested it over historical data, and you know that next time a trade opportunity comes up that meets these parameters of this strategy, there's a certain percent chance of that.
Right.
Okay. Another thing which I liked the phrase you used in your book, actually there's two things. You talked about smart bets and observable facts. And I think maybe both these things tie in with what we're speaking about here. So would you mind just speaking about, what you mean when you talk about those two things, observable facts and smart bets?
Okay. Well, it's very okay. Smart, there are really, people think they're good bets and bad bets. And in their mind, they say bets they lose are good, are bad bets, and bets they win are good bets. That's not really true. If you look at it statistically, there are good bets where you have a big chance of winning a lot of money, and the odds are with you. A bad bet is you have a big chance of losing a lot of money relative to your core capital, and that's a bad bet, because that could put you out of the game. That takes you from being a casino operator to being a punter. So it's a good bet is when you have the odds and you can make way over what the odds will do. Doesn't mean you will, but the odds are with you that you'll make money. If you do it, I always do it. If I did this bet 1,000 times, how would I do? And I won't do bets that if I did them, 100 times, I would have to come out a winner. And that's really important to me. So I go from being a punter to being in the house.
Right. And then the second part about observable facts. What do you mean when we talk about things which are observable facts?
Because you're going to make a new high in a month. That's observable. In 30 days, it is not better than that high. That's an observable fact, or low, or whatever. But is it a fact? It's not a story. It's not telling me what's going to happen later on or whatever. It's an observable fact that two people with ordinary intelligence can observe that fact. And it's a number.
While we're on this subject, and as you're highly regarded as one of the people sort of very early to trading systems, what are the most important things for traders to remember when building trading systems?
Understand what you can lose relative to your core capital. A trading system gives you an enormous edge. You don't get an edge unless you can stay around. And you got to get the odds on your side. If you're putting it all on black, the odds are not on your side. And you always got to ask yourself when you do anything, what's the expected value? How much does this average out if I do it 100 times? So is it a very good bet that gives me a high return? And the odds are, a good bet is defined as you can make a lot of money, you can lose, you can make a multiples of what you risk.
Do you, just expanding on that further, do you have any risk management rules which you live by? Like, I guess just going a little further into your risk management philosophy there.
Yeah. I always figure out what the loss could be. And if I can't take the loss, I cut the bet down to a point I can. I'm totally indifferent to what the fucking market does most of the time. I would rather win than lose, but I'm going to be really willing to be the house.
One of the things which stood out to me from reading your Market Wizards interview with Jack Schwager from, when was that? Was that the 90s when that book came out? Somewhere around that time. You can tell me.
Yeah.
Yeah.
Kind of like 80s, 90s.
Okay.
Yeah, you're right.
Yeah. And also your book, which is coming out. It seems like early on in your career, you were around or you knew of numerous people who had made quite a lot of money in the financial markets and then also later on lost that money, and not even necessarily like way further in their career, but in a short period of time had lost a lot of the money they had made. That must have really shaped your philosophy on risk.
Yeah. That's why I always go against my core capital. I don't feel I'm Superman, and I'm only want to bet a given percentage of my core capital. I don't break those rules. I make money by staying alive and betting. Really. That's what it comes down to.
One of the things which I feel like I should probably bring up here is we're talking a lot about, betting when the odds are in your favor. I think the second part to that is also sizing your position correctly.
Correct.
So how do you think about position sizing?
I go from where I enter to where the stop would be, divided by what my core capital is. It's really third grade shit.
Yes, it is. It is very simple.
No, but simple has a very bad reputation.
Sure.
But I'll tell you what simple really is. It's robust. I don't want to be in anything that's very complicated or they don't know how to unwind it. I want to come out and stay alive, because the more I stay alive, the more money I make. And I have a great lifestyle. Married to a beautiful woman. I live in Miami and in New York, two of the best streets around in either city. And for a guy who was left back once in school, who was never in the bright classes, who was never a great athlete, life couldn't be better. Why do I want to fuck it up?
Well said. Just for some clarification on your position sizing method there, what you said, you'll take your entry price and then your stop price, that's your risk, and then that should be a certain, I think you said that should be a certain percentage of your capital. What sort of number do you use there?
It adjusts each time, but it's what I can't stop playing. I'm in as one guy, Alex Raisman, who came to work for me, and he had been an engineer and he's very smart. And I gave him some numbers to run. And he turned to me and Alex said, "This is a positive mean game." Now, I didn't know what fucking positive mean was, but he was right. On balance, my expected value of any trade I made is positive. Otherwise, I wouldn't do it. Doesn't mean that it will work out that way. But if you average them out, yeah, it works. And that's why I'm never really shooken up.
What about when you enter into a drawdown? You know, have there been any challenging moments during your career which have come from drawdowns which you've gone through?
Maybe in the very beginning of my career. Part of being a speculator is you have to live with drawdowns. You can never make a bet that you can't. So I got to keep the game going. I size all my bets to the law of large numbers and having them work for me.
Can you recall your most memorable, your most severe drawdown? And I'm talking like on a portfolio level.
At the very beginning, I had because of my vision, I always had somebody like an assistant. And this guy, very smart guy, looked like almost Sharif. He was a scholarship guy, but he hid with my partners, and he got into a bad trade, and he fudged the books. And it turned out, from being a wealthy guy, I was a much poorer guy. So I had to unwind his trades. We had used a lot of borrowed money, which should have been hedged, so he didn't hedge. So I had to deal with all of that. It was very, extremely tough for me.
Do you recall what kind of drawdown that was, like in terms of your capital?
And we had about $10 million, and we owed $7 million. We owed about 20% of that. No, less, 10% of taking all the money we had minus 10% that we didn't have.
Wow.
Roughly. But, yeah. And I bought into this whole deal and took him along because his job was to keep the numbers straight. He was a numbers guy.
Must have fudged the books in a pretty serious way. That's quite significant.
Well, it was a highly leveraged account, and if you're a straight guy, you can't believe. After all, he was my partner. He had the same liability I had. So he might have wiped out my family, but he's wiping out his family too. If you're a rational person, you can't imagine somebody would do that. I mean, I come from Brooklyn, and in my neighborhood, it was not so hard to imagine that somebody would want to fuck you over. But that somebody would fuck himself over, that was amazing. I can't tell you how terrible that was. But it would end. Then I had to get him to cooperate to unwind all these trades, get the investors to put in more money. It was really tough.
Did you feel as though that could have been it for you at the time? Like that might have been the end of your trading career right there?
Could have been, but, I just keep going. Look, here's the deal. You're up against the wall. You have you could tell the guy, fucking shoot me. Or you can bluff your way out. Well, if you don't try to work things out, you have a zero chance of improving anything. If you figure out, hey, maybe I could stall this, maybe I can change it. Just, you're not accepting defeat. It turns out I went on and I started mint.
Larry, as we're getting on a little bit here, and I should probably let you go shortly, there there are just a few more things I'd like to ask you.
Sure.
You've had a long career in the markets. You're a very wise man, and you've been immensely successful financially. I'm interested to know what's been the most rewarding moments of your life.
My wife was dying in America. She was from London. And there was a guy named Harvey McGrath, that man. And his wife. So my wife was sort of missing London, and she was dying in New York. And I went and slept in the hospital with her. And she didn't ask me to, but I could see in her eyes she wanted that. And so Stanley Fink was starting a children's hospital. And so I wrote a gift into the hospital. And it was in memory of a conversation between Alice McGrath and Sybil Hite. And I was in that children's ward. Alice McGrath's daughter later on became a pediatric doctor. And she was in a London hospital, and she was pushing this pram, this baby, because what I gave them were, for tweeny babies, a sealed crib that would keep the baby warm. And Allison saw it, holy shit, it was to mark a conversation between Sybil Hite and Alison McGrath. And that was great. 1,000 babies have been saved by that crib. Loved it. Fucking great. I never particularly got a thank you. I just did it, and it was great.
That's pretty incredible.
Yeah, really is. And I always try in my charity to do shit like that.
Yeah. You do quite a bit of charity work nowadays.
Yeah. Because I don't really need the money. I mean, I'm not super rich, I'm not, maybe I got $100 million, but I'm not really rich. I'm not like Marcus Zuckerberg rich. Or even David Harding rich. But yeah, that was like a great thing. It's great to help those babies. And it's a gift that keeps giving.
Yeah, absolutely. And if I was just to flip that question on you, looking back over your career, are there any regrets that you have?
No, I don't regret anything I did that I either lost or won at. I don't give a shit. No, I don't. The only regrets I ever had was every pretty girl I didn't come on to. That's it.
That's your only regret.
No, not trying is a much bigger regret to me than failing. That was the benefit of having those disabilities. If you don't try mathematically, you have 100% chance of not winning. If you try at something, you may double your chance of winning. So if it's something good enough, you always got to give it a go. All right, is there anything else you need?
I think that's about it. You've just finished your book, The Rule. What's the release date of that book? When does that come out?
October 1.
October 1. Okay. So this episode is going to come out just before then. But I'll put a link if anyone who's listening to this episode right now would like to read Larry's book, The Rule, which is coming out October 1st. You can go to chatwithtraders.com/therule. and that'll take you directly to Larry's book on Amazon if you'd like to
Thank you.
get a copy there.
And I enjoyed talking to you.
I also very much enjoyed it, Larry. So, I want to say a massive thank you to you for taking this time to speak with me. It's a real honor. It's quite inspiring as well to hear from you.
Oh, thank you.
So, are there any final words you'd like to share, with any aspiring traders coming up today?
Don't forget the rule. No, seriously.
How come you called it The Rule? Like, what's behind the title?
Because I like simple shit. And I once said, it's really simple. It started, I said, look, in this game, you always have to cut your losses. I don't care what knowledge you have. And I've tested this. So you must cut your losses. Now, that'll keep you alive. It'll make you a good living. If you want to get rich, the next thing you do is add to your winners. You do that, anybody did that, any formula, go back in computer, you'll make a lot of money. So that's the rule. And by the way, the rule can apply if you're in a bad marriage, bad job, or whatever.
Yeah. Well, again, folks, that book, chatwithtraders.com/the rule, that link will redirect you to Amazon, and you can find Larry's book there. And Larry, again, I truly appreciate you taking the time to speak with me. It's been very enjoyable, so thank you.
It's enjoyable to me too. And if you're in New York, give me a call.
100%. 100%. Thank you.
Bye.
You've reached the end of this episode of Chat with Traders, but rest assured there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes, and we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.